Hey, everybody. Welcome to Market Mavericks. We are back after a multi-week hiatus to talk about all things markets related, stocks, commodities, crypto, bull, bear, you name it. We're all here for you guys. So we're here with Scott and Mike McGlone here. How are you guys doing today? Happy New Year.
Good. Happy New Year.
Happy New Year.
Wonderful. So the big question is, where do we start? It's been a long time since we've kind of given people the analysis that we always do. Where do you think we should start? Should we start economic activity, crypto, stocks? What do you guys want to do?
We start with Jimmy Carter, right? We get a day off for the death of a president. So it's an interesting day, I think, to have this show because Bitcoin's open. Like you said before the show, commodities are open. There's a lot of news flying in around. It's just stocks aren't moving at the moment. So it's a really interesting day, actually, I think, to do this.
And I think one of the big things that most people, and this even is clearly affecting crypto, is yields. And Mike, you can probably speak on this more so, but we've seen the yield continue to go up. So the Fed, and this, I can't help but smile, but it's not funny really, but the Fed cuts interest rates by 100 basis points and interest rates go up 110 basis points. So it's a 210 basis point difference in what's going on. And I guess, Mike, is that because inflation is upticking? Is it because tariffs? I mean, is it all of the above? I mean, what's going on here?
Yeah, I think that's a good place to start. It's the most significant macroeconomic factor, I think, on the planet, that the fact that Fed's cutting rates and yields are going up. That, to me, is a signal that this massive wealth creation effect is over and done. And I'm showing a little bit of here, and that's stock market cap to GDP at 2.2 or so is just too high. And for the Fed, for anything to matter other than the stock market. So we spoke about this before, that when the Fed started cutting rates, it was probably not, it was going to be good for the stock market. But now we've got to the point where it's boosting inflation, consumer spending. The wealth effect is the greatest in 100 years. And the fact that it costs you more to get your mortgage with the Fed cutting rates 100 basis points is a bad sign. So to me, this is also, I rope that into what I'm seeing happen. Yeah, a lot of people saying on the show, Mike, you've been early, you've been wrong, right? The difference I have this time now is we have that potential peak in the world's most significant risk asset on the planet now, Bitcoin, as designated by our new president-elect. And my chief market strategist, Gina Martin Adams, has turned bearish in the stock market. Now, that's a profound statement because she's been bullish for the 8 years I've known her, most notably, except for a few points. So yeah, it's a while. I mean, it's a known how expensive it is. Everything's going to be about this payroll number tomorrow. But to me, this is where I really look at that Bitcoin gold ratio in school. I'll know I was pointed out at the beginning of last year, I was really fearful Bitcoin was going to beat gold. Was wrong. I'm going to publish that again this year. You know, if you keep saying the same thing, eventually you're going to be right. To me, that's why I'm really worried that this is the year, and it all makes sense with this new all this hopium for this new president-elect. And I'll end with this: is we all are seeing what's happening with this emboldened human being who's been elected our president. With the headlines lately, the things that he's emboldened to do are quite extreme. We should get volatility. Volatility has never been good for the stock market. And one thing that's going to happen right away are tariffs. Now, that's from the book No Trade is Free from Robert Lighthizer. And the thing that General McMaster pointed out, he's going to hire nothing but, or have nothing but loyalists on in his administration, is completely happening. The thing about tariffs is they happen day one, but everything else he's talking about takes acts of Congress, and the effects in the markets may take years, versus tariffs will kick in right away. And the number one thing tariffs are going to hurt is not so much pick up inflation, but corporate profits.
So I guess the big question, let's just circle back to yields and talk about that, because there's no doubt about it. When yields went up the last couple of days, the stock market sold off dramatically, and even Bitcoin sold off dramatically, right? And we know Bitcoin is following the Nasdaq. I like to say it's more the Nasdaq because that's kind of the higher risk mega cap tech, Tesla, Nvidia, that all kind of get lumped in. But I guess Scott, are you in the camp that we're going to see rates continue to go up? Or are we going to finally see rates start to fall and fall dramatically?
You mean the Fed's attempts or the actual real rate on the 10-year?
More the real rates, right? Because obviously the market.
I think they just topped for a bit. Okay. I think markets are going to kind of go into wait and see mode here. I mean, that 200 bip gap that you're talking about is really significant. I start to get surprised, I think, if we continue to see that grow. But to that end, I think that also means that the Fed is going to disappoint markets by doing nothing.
right.
for a while.
And
Right.
we've
So,
had
and I think if you're looking at the actual what the market's saying, I think we're now at sub 50% that there will be a rate cut at the next meeting, and people are even doubting now that there'll be a rate cut between now and March, maybe even going into the summer, pricing in only 25 bips. So I think that the hype around massive rate cuts and a quick cycle is largely gone, and that may be what we're seeing. I mean, how much can they really cut again and risk rates going up?
Right. I mean, that's got to be a little egg on the face, right? I mean, here they are cutting rates, and all it's done is go in the opposite direction. And let's be fair. I mean, even with rates at 4.7%, the S&P is still pretty close to the all-time highs, and even Bitcoin. I mean, Bitcoin is still relatively close to its highs. I mean, it can't. Just a couple of days ago it was at 102,000 or so, and we're back to 94 or so, somewhere in that vicinity, or 93. But the question, I guess, is like, is this more a matter of a strong U.S. economy? Or is it more of a matter of inflation, or is it a little bit of everything, Mike? And are you in the camp that, you've been kind of in the deflation camp for a while. Are you still in that camp?
Let's focus on the number one thing I think I've been wrong on, and most of our viewers will point out many more. I'm glad you pointed on this. I've been wrong on the U.S. bond market. I still think that's the next big trade. I'd say I've been wrong about 2 years on that. And I've had this happen to me before. Sometimes I'll get stopped out, and I just see it brewing bigger and bigger. And that's what I show you in this main line here. That is the yield on the U.S., the top 5 countries in the world, which starts with China through India, UK, Germany, and Japan in between, minus the U.S. 10-year note. It's the greatest. It's 130 basis points. So those yields are 130 basis points less than the U.S. So the rest of the world, most notably China, with the 10-year note yield about 1.6, are showing severe deflationary forces. If you look at their bond yields, which is the bottom line for all markets, is the riskless bond market in that country. And the key question is, what stops that from tickling over to U.S.? And my main trigger for this year is it's going to happen. I thought it was going to happen last year and the year before, to quote Roger Babson, but again, I think it's going to be more this year, that this is going to be that 4.7 and a 10, sure, maybe it gets to 5, but it's at such a risk of just dropping to 3. Which means nothing. And what makes that happen is one key factor. The number one factor in everything is the elevated U.S. stock market just giving back some of the, and I didn't say go down, I mean giving back some of the massive gains from just last year, which maybe if it drops 10%. If it drops 10%, which I think it's going to, let's put it this way, I'll make a prediction for this year. We will have a 10% peak to trough correction in S&P 500. Maybe it's already started. It's down 3% or so from the peak. Last year, the peak to trough, I think the most was about 8 and change. We're overdue for that. Equity strategist means that when that happens, I fully expect Bitcoin to drop 30%. Maybe it started already. Crude oil to drop, copper to drop 20 to 30% on a volatility weighted basis. And the key thing will be watching things like TLT. And this is what I show you in this chart. I'm just taking S&P 500 versus gold. It's so ready to break down. But the key thing I've been watching for a while is this TLT chart. This if you take gold divided by TLT, it's the highest ever. And I'm bullish gold, but it's telling me that maybe U.S. bonds are just so cheap. That's the next big trade. Been wrong for a while. We had one little brief moment last year on that. So you just look for triggers, you look for might happen there. And so far, we're not seeing anything. But tomorrow's unemployment number might be it. But our strategist, our chief economist, Anna Wong, expects it to be a blowout number. She's looking around 250. But unemployment number to keep ticking up. Now it'll be a one-off. Remember, this is
cause the stock market to sell then, right? Because yields would go up.
Yeah. So that's the key thing. The key thing to remember is stock market is, when people talk about GDP and all that stuff, it's really silly. It's all about expectations for liquidity in the Fed. And right now the Fed's out of the picture, I think, until risk assets go down. And the point is, you've seen elevated inflation staying sticky. And why should inflation go down when we added total market capitalization last year, around $13 trillion to the U.S. stock market cap. It's the most ever. And this wealth effect is about the most ever. I mean, I'm talking about historic things, and I'm looking for triggers to show you when they're going to start kicking in. Bitcoin to me is the number one. If Bitcoin does not go above 100,000 and keeps ticking down, that's your sign that all these risk assets are pretty expensive. Now, I want to end with one key thing. I just want to show one key thing. Which one is it here? I don't have it. I forgot to put it. It's right here. I want to show you. It's the Bitcoin to gold ratio and Doge. Doge right here I'm showing you Dogecoin, the market cap. It's $50 billion. It's silly, it's expensive, stupid, silly, whatever. And if you look at Bitcoin to gold, it's like the same chart. I think that what's going to happen in cryptos is we're going to see a massive purging. Well, we know it's just a question of time when things like Doge are just going to go towards zero. And that's a problem for Bitcoin.
I wholeheartedly disagree that Doge will go to zero, but I do think things like Doge will go to zero.
Towards
like fart coin?
Yeah, fart coin may be here to stay, sadly, but I think the 99.9% of Doge and imposters will probably go to zero. But I do think that Doge has captured the zeitgeist long enough and has a bit of a network effect going for it. And I do believe that Elon Musk will continue to push that. So Doge itself, I think, regardless of what you think about its intrinsic value, is, I think, here to stay. Is here to stay with us. Can I show you something I find really interesting, though, Gareth?
Let me bring you up.
Kind of all this. You just mentioned, obviously, the S&P, right? I mean, topped at 6,100, currently sitting at 59, only a few percent off. Stock fear and greed at 3% off of highs. If you believe in these metrics, people are extremely fearful, according to this, which I find really interesting at 3% off the highs. So it means to me, there's something else going on. So you look at crypto fear and greed, and Bitcoin's down $10,000 since Monday, and you're still at 69, which is greedy. I wonder if this is the Saylor effect, that we're all just counting on him to buy every single Monday, giving the market confidence. It's just, I think it's a really interesting sort of divergence there between the way people are feeling about stocks that are basically at all-time high, and crypto that, it's 16% off the highs, which is a pretty, I think, decent retracement off that 108,000. The other thing, when we were talking about yields, obviously this relates, but you look at the dollar, which kind of bottomed in September, and it's gone nothing but up since. Usually, Mike or Gareth, wouldn't you expect that when the dollar ranges from 100 to 109, that would be down for stocks and especially other risk assets? But instead, you have SPX. I mean, you look at September, SPX is up 1,000 since basically the dollar has been raging. And Bitcoin, I mean, where was Bitcoin in September? I think 52,000.
And I think this brings up a great point, as usually you do see that inverse relationship. My guess is, if I had to just throw a spitball at it, is that the U.S. has now become the one place where all the money flows, right? Yeah. So they flow into the U.S. dollar for the safety.
Dollar is strong versus other things doesn't mean dollar is strong versus,
right, exactly. And I think that's one of the big risks, is that at some point, things like China, things like other areas of the world become there, which are super underinvested. That could be an area where people start to get a little skeptical on the U.S. economy, because let's be fair, China's in a mess, Europe's in a mess. I mean, there's so many other places in the world that are really not looking good economically. The U.S. has still looked good for now, but if that changes, I do think a rotation of capital could be on the horizon.
So I think it's more of a when than an if, and certainly for a shorter period of time. So let's unpack some of the stuff we've all pointed out here. First, the dollar. The correlation between the U.S. stock market and the dollar measured on a trade-weighted basis, when you measure it versus other fiat currencies, has been almost tick for tick on a straight-up line since 2011. So when people talk about a dollar potentially backing up, it means the U.S. stock market probably has to lead that or go down with it, or U.S. risk assets going down. So to me, that's been the lose-lose for commodities forever. It's an oxymoron to say stock market up, dollar down, at least for the last 15 years. That's a key thing. Another thing I want to point out that you mentioned, Scott, is Michael Saylor. In 2020, Michael Saylor helped really fuel my bullishness, our bullishness, all of it. Now he's done the opposite, because he's breaking a rule that I've learned in I'm almost 4 decades in markets. You never, as we've said, never mess with the market gods. His hubris and he's just so hubris against Warren Buffett and adding to longs with massive profits is just the essence of what you're not supposed to do in terms of proper investing in portfolio management and diversification. Good luck for him. I hope it works for him. But this is a clear sign for me. It's the human nature of, oh, thank you for that signal, sell. Because I mean, he first said in 2010, it's about 2020 is about the same time I said, okay, 10,000 Bitcoin shouldn't just add a zero. Now it should be, instead of adding to those longs, the rational investors should be booking those profits. And okay, maybe if we can.
In his mind, they're not longs. That's
exactly. I get it.
Unique. In his mind, it's a buy and hold. I don't know if you saw the video of him recently where he said, "Burn your keys when you die" as a pro rata contribution to the other Bitcoin holders. But holy crap.
I get that. Next, what I like to point out, is 2.4 million wannabes. Back in 2020, there was 10,000 other cryptos. Now there's 2.4 million. And that's the key thing I think people are forgetting about this space. If you look at, let's say, I compare Bitcoin to gold all the time, there's only 3 other measures that are any similar to gold, and that's silver, platinum, and palladium. That's it. Nope, there'll never be more. Maybe copper doesn't. That's it. There's 2.4 million Bitcoin wannabes, or similar things that are like Bitcoin. Look at Ethereum. Look at anything. I only mentioned Dogecoin because it's a joke. There's Shiba Inu because they're a joke. But that's the point in the space. Is I'll end with this. Before, I kept saying I don't think we're going to see a peak in cryptos until we see a widely disseminated ETFs. Check mark. We're there. We've already done it. I don't think we're going to see a bottom in cryptos and risk assets until we see a significant purging of some of the speculative X's in some of these bogus coins. And they're just, Shiba Inu is just one example, but and Dogecoin is just another example. And then there's 2 million other examples. There's just too much froth and profit in that. And then if you look at the valuation of the U.S. stock market, all this just needs a little purging. What's the signal? What's the trigger for that?
So, Scott, one thing I wanted to ask you is does Michael Saylor and MicroStrategy buying this much Bitcoin concern you as a Bitcoin investor? Meaning, like, when any one entity owns that much, if it ever goes down to a point where they're forced to liquidate, I mean, he literally could destroy the value of that. And listen, most Bitcoiners will say, oh, it'll never go back to 50,000 or 40 or 30 or 20. But there is a risk there, right? I mean, everything, there is a risk. And he owns so much now.
Well, he owns a lot, but he ain't the biggest, right? There's a lot of even unknown out there. I mean, think about if Satoshi Nakamoto wallet just decided to unlock one day and sold off 1 million coins, right? I mean, I think anything's possible. There's certainly a lot of centralization and mining and the control. There's a lot of people who own a lot of Bitcoin. So yes, I think at a certain point it becomes a concern. I mean, to my knowledge, right now, the way that his notes are structured, he's just getting such a good deal that I don't think he really has a liquidation price realistically at the moment. But if you're speaking of like an existential risk of somebody taking on too much leverage and owning too much Bitcoin and being forced to sell, yes, I think that is something worth paying attention to. Listen, I love Michael Saylor, obviously I've spent quite a lot of time with him. I love what he's doing on behalf of Bitcoin, but like everyone who's flown this close to the sun at any point in crypto has ended up sort of being burnt. So I think it's time to be careful. But I will say, it went from 2.5 billion a week to 1 billion a week to 200 million a week to 100 million this Monday as far as buying. So whether he wants to or not, it seems like at least for the moment, his ability and dry powder are drying up a bit. Right.
And
so
do you think
at the current level, I'm not concerned. If you own 5% of the supply and price went down 50%, I would start to be pretty concerned.
Do you think that the weakness in Bitcoin is partially related to his kind of losing out on or less dry powder? Like he's not buying and supporting it?
I don't think so, but I do think that if all of a sudden he stops for quite a while, that could spook the market if we're still in this sort of temporary downtrend. I don't think that would be great, but I think he's going to keep raising money and buying. And I think there's still a real appetite for it. I mean, listen, like, first of all, we've had to retrace every January in the first year of the halving cycle. Not that that's such a big deal. And they're usually 30, 40%. We're at 16. So like, it's painful. We're exhausted. It's whatever. But like, we are not even at par for the course. We're at birdie for the course right now with this retracement. So it's just not really that concerned if you've been here before.
Yeah, absolutely. I just wanted to show this chart. This is one we talked about 3-4 weeks ago, the last time we did it. And we were just below that 108,000 level, which was this trend line. It's a parallel here. And you can see, again, 2017 high, the first high in 2021, second high. And look at where we stopped on a dime right at that level. Pretty incredible just to see how.
Is that linear or log, by the way? I didn't look at it, but
this is actually a linear chart. Yeah. I mean, excuse me. Yeah. Linear chart. It's just incredible. And how that's exactly parallel to these lows here, which was the bear market lows. So for me as a technician, I just say, okay, well, unless we can break above that level, this line is now the line in the sand to watch on Bitcoin, which currently it's up to about 110, 111,000 now.
Yeah, I'd love to climb that line for the next 9 months.
That would be amazing. You're right.
I'll give you one prerequisite to climb that line, then U.S. stock market has to keep going up. The 100-week moving average, S&P 500, I'm sorry, Bitcoin S&P 500 at 0.55 is the highest on the way up ever. Here's a little fact for you. The 100-week average between Bitcoin and Doge is probably 0.8. I mean, it's like, don't underestimate how this whole space is completely correlated to each other and the rising stock market. And it's only seen minor corrections. There's only been two down years since 2011, S&P 500. Both of them, Bitcoin dropped 3 to 4 times. Okay, yes, it went up a lot more. But to me, that's the thing that we're going to face now. This is the bigger picture macro, is that we're getting to a point in risk assets and cheap bonds, which are like the lowest part of U.S. portfolios in decades. My colleague Jonathan Levin just wrote about, and equities are the highest portion ever of U.S. Net worth. That you have to be looking for alternatives. Now, crypto was a great for that. I keep thinking that's why I'm the thing I've been wrong on. I wrote about this time last year is I'm worried that gold's going to beat Bitcoin this year. I meant that for 2024. If I keep saying the same thing, you think I'll eventually be right on that one? Maybe this year. I hope it doesn't, but I'm afraid it's gonna.
Yeah. Well, when you made that bet with Dave, to be fair, I think that Bitcoin, it was at the high, so it's effectively at the same level. So even with this Bitcoin move, you did time. I think it was March. You said that bet, and that's when Bitcoin kind of hit that top and retraced. So you could win just by default of perfect timing, right? For a year. I mean, I've got that chart actually right here.
But one thing I have to admit is the minute the world changed on November 11th when President Trump was elected. Now we have the word, there's no the saying there's no zealot like a convert. Well, he's converted. That was a shocking shift. I did not think he was getting elected. Check mark, got that wrong. But now we're in the stage that we've priced in, as you showed in your chart, so much perfection in all risk assets for this human being to make them go higher, that the lessons of history and human nature are you're probably better off if you're in those assets to say, thank you, you already gave me that wealth. And if they're going to go higher, probably using some kind of derivatives that's going to prevent you from getting crushed if we get some normal reversion, which we're just overdue for.
And just to pop in here, I just want to show, so we're talking about if the markets fall, does Bitcoin fall? And there's some really interesting stuff to show here on chart wise. So this is a chart of the NASDAQ composite. This is your COVID low. So that was your lowest major cycle low right in March of 2020. This is your bull market 2021 high, bear market low of 2022. And look at what we just tagged right here, the high of that parallel. So that again is, we talked about the parallel on Bitcoin, and look at the coordination of the NASDAQ going to the COVID low here. Remember, the Bitcoin one goes back to 2017. So it's not like it's COVID to COVID. It's different time frames, but both at high ends of parallels. And then the last thing I'll just show here, which leads me to believe that we could be at a more major top. This one's a little spookier. We go to the logarithmic chart on the S&P 500. We'll flip to the monthly because we are going back almost 100 years here on this chart. Bear with me here on this. Bear with me. This is the wrong S&P chart. Let me see. This one I think is the one we want to look at here. If we go back, and for some reason, maybe I'm not on the log chart. There we go.
You got to go log on it. There you go.
Yep, there we go. I didn't have it on the log chart. But if we go back here on the S&P, you can take the high of 1929 right here, 1929, just before the stock market crash and the Great Depression, connect it to the .com high, and we literally just tagged that line. Look at this right there. And so for me as a technician, right, it's like, okay, well, one line, whatever. But when you start taking different time frames, and one a log chart and one a linear chart, and they're all matching at these massive highs, I'm like, oh shit, what could be going on here? Is this a bigger top in the markets potentially forming? And again, no one knows. I don't know. We'll find out in 6-12 months. But these are things that, again, pique my interest for sure.
I'm glad you mentioned. I think, Scott, you'll probably have something to say too. And that's why I point out to what's happening in the rest of the world. This is epic historic. China is doing the same thing that Japan did in the peak in 1990. And I worked for Japanese firms then. I remember really well. It's actually, the thing is, it's worse. Partly because it's, they're just, the latest book I'm reading is the world chaos. What's it? The Chaotic World from, but I forget, The World on the Brink by Dmitry Aperovich. It's just, this stuff is, like you pointed, it's global. The rest of the world's already tilting there. They're going to face tariffs from this wonderful country that's been letting them export to this country for decades, and it's going to be pushback. So to me, it's just getting started. And the question is, I first of all, I look at it from this way. It's a great year for tactically traded, and be very careful along highly volatile speculative risk assets like cryptos.
So let's talk quickly, go back to crypto, because I want to get Scott's view on a few things. So Mike thinking we topped out. I'm kind of in that camp a little bit because of the stock market charts, and I know the correlation with Bitcoin. But Scott, do you think the high is in, or are we just headed? I mean, if you go online to most social media, we're going to 150 by end of year at minimum.
Yeah, I still lean that direction because I just believe that there's enough potential catalysts that are not yet priced in. I mean, maybe the idea of them is. But true fundamental catalysts, like I don't know what the odds of a Bitcoin strategic reserve are in the United States, but I don't think you can price in an executive order, whether it happens or not. But even Donald Trump making an executive order that says the United States intends to, make Bitcoin a reserve asset, and what that does to every country in the world, basically forcing their hand to buy Bitcoin as a strategic reserve asset just because the United States did it. So I think there are enough situations like that out there. We haven't even gotten the Trump presidency yet. We know that he's literally come out and said, I want $150,000 Bitcoin my first 100 days as a marker of the success of my presidency, right? I mean, listen, I don't know how we can square the data, which is arguably very bad, as you guys have pointed out, or certainly on the brink, and what you show on the chart with just the insane potential of this presidency with pro-Bitcoiners and crypto people everywhere, and knowing that this president will do literally anything to keep the stock market afloat. Now, listen, maybe there's an argument that it's good to let the markets fall at the beginning of his presidency so it looks good at the end when it comes back up. Like, don't set the bar too high. I could see an argument for that, but I think he really wants things to go up. And the one thing I've said to Mike, we've said this so many times, the one thing I've been impressed with over the past maybe 2 years is the levers that they can pull that I didn't know existed to keep this thing afloat.
Yeah. And I would just say too on this is that, regardless of the bearish chart kind of action, it wouldn't be something that I would short because exactly of what Scott said. So it's one thing to say, hey, I'm not going to be a buyer at 100,000 on Bitcoin like Michael Saylor, but it's another to say, okay, well, I'm going to go short. And I definitely, with what you just said, like the potential for an announcement of a Bitcoin reserve where it would pop 25,000 probably instantly, you definitely, it's not something you would short at this point. But for me, it's a kind of a wait and see sideline.
It's still a tiny asset, right? I mean, at a couple trillion, this is not a large asset class. And if I'm not saying it will happen, but if, every country in the world is like, I need to add a little Bitcoin to the balance sheet because the United States has now said it's a reserve asset. Like, you can't, I'm sorry, there's just not enough coins for that not to send price up hundreds of thousands of dollars with time. So 100%. I do think that I do think there's a scenario where Bitcoin can go up even if other things go down. But I do think that the black swan generally for Bitcoin is if we don't get all the things that we're expecting in the early days and people are disappointed, which I think is inevitable to some degree. I said this earlier. I mean, politicians make promises, right? Mexico still didn't pay for the wall, and there were new taxes when they said no new taxes, and all the things that politicians of all parties say before. And if he doesn't do anything in those first 100 days and the stock market's on its way down, I would say look out below for a little while.
Yeah, that makes sense. You mean so we might not own Greenland and the Panama Canal and
I mean,
Canada?
To be honest, what's Greenland anyways? Canada, I mean, it's not even like a real country, right?
I think those are
some
significant statements. First of all, I completely agree on that if statement. If we have the strategic Bitcoin reserve, that's obviously, to me, that's the single most bullish factor, but it's a significant if statement. Everything else I point to are last year, I'm thinking we're going to look back as 2024 is the best year ever for Bitcoin in terms of things to look forward to that happen. Now we have one key thing we're looking forward to. And then I look at, and it's also the lessons of human nature. People remember Trump as the biggest cheerleader for the stock market, but when he was elected in 2016, stock market cap to GDP was closer to 1.2 or so. Now it's 2.2. All right, great. Thank you very much. Where, it's just, there's too much optimism. And just the point you said that, he wants Bitcoin to go up. To me, that's why I point out, it's indisputably now, obviously in my view, the world's most significant leading indicator risk asset. Trades 24/7. It's got to go up. And when something has to go up, I think the more prudent people know and say, yeah, I'll be looking for ways to test shorts in that. Maybe not yet, but it's giving you a chance to. Is this a consolidation of a bull market, or is it giving you a chance to define risk? And so to me, that's going to be the key trade. And that's why I point out everything I write about now. Even if copper goes up, well, Bitcoin's got to go up. Stock market goes up, well, Bitcoin's got to go up. Crude oil, well, Bitcoin's got to go up. It's just too much dependent on this one single silly little asset. There's 2.4 million wannabes.
Yeah, no, I think that's definitely there's pros and cons. There's no doubt about it. And I would say by March, we're going to have a good sense on where assets are, both Bitcoin as well as, and like Scott said, I mean, within that first 100 days, I honestly think even Bitcoiners will be upset if it's not in the first 30 days, because they're just, they're kind of on the edge of their seat. But all right, let's call it there, guys. Amazing show. So good to have the team back, guys. Hopefully we'll be back next Thursday for everyone again. We appreciate the kind words, the comments. Follow the gentleman below, and we'll see you next time. Take care.